Good morning, YouTube. Silver 5150 here. And I just wanted to talk a little bit about the markets right now. And I'm a little irritated because I can see what's going on in the reality of the markets, that everything is orchestrated, whether the market goes up, whether it goes down. And it's been going up a lot lately because there's a lot of intervention going on from central banks and business buybacks of their own stock, and just crazy things going on in the regular banking system, with repurposing agreements and quantitative easing and bond buying. These are all emergency measures that should not be going on in the stock markets. The stock market should be pretty much filled with people that are either business owners, businesses themselves, the value of Apple, the value of Alphabet, Google, Procter and Gamble, this sort of thing, that determines the value of the markets. And if people want to invest in them, or if the hedge fund managers want to have people's 401ks in them, then that should rely on the performance of the said businesses and resources therein only. Unfortunately, we're in a day now where the stock markets are completely overweight, and they have to be supported by our central banks overseas, because everybody's in it. Everybody's in it, whether they know they're in it or not. You're probably in the stock market. If you have a job or you have some sort of, earned income or something like that, you're in the markets, and the markets are not healthy. They're not solvent, because you have to have all of this emergency central bank intervention to keep it afloat. So today I'm watching, after weeks and weeks and weeks of the stock market going up or going sideways and, heading into the stratosphere here under this new administration, all of a sudden, I mentioned yesterday in one of my videos that the ECB chairman, the European Central Bank chairman, Christine Lagarde, comes out and from out of nowhere mentions the slowing of growth in Europe, which we've known now. Any of us that watch the markets or watch global economics and macroeconomics, we've known this for probably 4 or 5 years. So why is it important that someone official comes out and says it now? Trump follows up today, the president follows up today saying that, we might not see any kind of China trade deal until 2020. Now, mind you, these people have been upbeat and positive for the last 24 months, talking about how great the economy is, talking about how great growth is. All these growth numbers have been coming out, and the truth is they have been doctoring all that information, or withholding the truth, or not putting out what's really going on. So now they're at an inflection point. They want to be able to keep the party going with the stock market cleared through the Christmas holiday, but I think with the absolute maximum effort they're putting in with the repurposing agreements they called repos, which is bank lending overnight. Their outside sources providing funding for that. They can't do it. They can't push the markets higher or even keep them where they're at right now through the Christmas holiday. And it's very important that Christmas looks really good to anyone that's got an income coming in, because that means they're going to spend more money, and that's going to create great economic numbers coming into the 2020 first quarter. So in order for this to happen, in order for there to be some sort of Santa Claus rally, some sort of positive economic news coming into the new year, they're going to have to dial things back a bit. So this is what I think we're seeing in the stock markets right now. We've got officials coming out and saying how things aren't so great, or expectations need to be lowered, and then that, of course, is affecting the markets in a negative way. We've got more downward action on the equity markets. And metals are up a little bit, but I'm not buying into any of it. I think it's all orchestrated. I think that there's no reason to panic in the stock markets. I think they're going to continue to go up, but before they can go up, they're going to have to go down. So what they're doing is the stock market bubble. Our lovely officials are pricking the bubble and letting a little bit of the air out in order to recalibrate, recenter, and then boost the stock markets up through the Christmas holiday. So they're going to have to bleed some of the air out first, then seal the hole, and then pump more air in it to get us through the Christmas holiday and have everybody feeling good, spending money into the Christmas holiday. Whatever you decide to do, I hope you all enjoy it. Here at the Silver 5150 channel, we love the Christmas holiday. We also love Christ, but we love, the spirit that's in the air, when people want to give. And some of us give too much, and our credit goes through the roof. And some of us give too little, and, we become miserable little misers. Just kidding. But regardless, continue watching these markets. The way I plan on playing it, I've got a retirement account that I'm going to be probably trying to leverage and trade into this action, which I don't do a lot of. I probably do once or twice a year. I'm going to see if they can continue to drop this thing to a certain point. Last year, if you remember, in December, they dropped the markets down to probably 22,000 and change on the Dow, and then everything else underneath successively. And then all of a sudden, after Christmas had passed on the 28th of December, Trump comes out, saying that, we need to start buying this dip because, just because. But it turned out he talked to Jerome Powell, the Fed Reserve Chairman, and had him pump a lot of money into the markets or drop interest rates or something like that. And it caused the market to shoot back up after Christmas, after everybody had been invested waiting on the Santa Claus rally. It never happened. I think this year they're going to do a Santa Claus rally. I'm not giving financial advice. I don't do that. I am not a financial professional. That's my disclaimer. I do not. I'm just telling you what I'm doing. So I'm going to watch this. I'm going to see if we can get down into those lows that we had last December. And once we get to where looks like to me, they've taken as low as they can take it with negative news because it's orchestrated, then I think I'm going to jump in, try to get in on that low, and then ride this next wave up, which I think is going to take us clear into February. I think they're going to figure out a way during this dip to get the markets up into February. And I'm going to ride that final wave as we start struggling through 2020. I will get out probably in January after I get into the markets. I'm not going to tell you when I'm going to get in. You have to figure it in on your own if you have an account where you can do that. Just start looking at the lows from last year, compare them to this year, see if we can get close, because one thing we can't do is outthink them. They can outthink us. They've already got a plan in mind, and their plan is to fleece us as much as they can. I'm going to give them a chance, but I'm going to see if I can outthink them on this one and hope I don't lose too much, but I hope I gain a lot. All right, this is Silver 5150 complaining to you about the markets and hoping that we can somehow capitalize on it. Precious metal holders, you're going to enjoy the next couple of days, but don't let it go to your heads because it's not going to last. Just keep on stacking, stay on course, stay with the plan, and we'll see some real live action next year. And we'll talk to you later.